Welcome to Stephen Johnson's Stocks. I am back and I just want to reiterate the importance of what is happening with us right now, with us collectively. Like, I am literally the first person in the fucking entire world to document his entire journey on YouTube from beginning to the end, hopefully from becoming a losing trader from day one up until potentially making $1 million. And I just want to reiterate that because it's so fucking cool. Talking about this week, I didn't actually make any trades until Friday. And on Friday, I was getting itchy, and I took a couple of trades. Actually ended up losing 140 bucks. But when you look at it on terms of last week and this week, I mean, I'm down about $70 over the last 2 weeks. And I'm really not concerned about the small wins and the small losses. What I'm more interested in is I feel like I'm undergoing a larger transformation. And the wins and the losses, the small wins and losses, they don't really matter. What matters is the fact that I'm putting in place a structure to be profitable, and I've identified the bigger picture setups. I get it now, I'm tracking them. And I'm also just refining entry points, and it takes time to not make the little mistakes, to refine the entry points, but as long as the bigger picture is going in the right direction, then everything's good. And I made a couple of small mistakes, but as long as you're heading in the right direction, it's fine. I always remember when I was first into journalism and I was in university, and the teacher was like, if you spell the client's name wrong on a press release, you're going to get fired. And I must have spelled the client's name wrong on a press release, which is fucking ridiculous, about like 5, 6, 7 times. And I'll tell you what, I do it professionally now, and I've not spelled the client's name wrong in about 6 years. So it's just about learning the small losses, like I should have had a wider stop loss there. I shouldn't have used the stop loss there. But as long as you're trending in the right direction, learning-wise, everything's good. Okay, so there's very, 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 very valuable lessons in this. Like a bit more analysis than usual, I'll put it that way, because there's some awesome lessons to learn. And I'm privileged that I can give you these lessons. But let's just jump into some questions first. Then I'm going to go straight into stocks and skip the Excel because it's just week one. There's not that much to say in it. OMG, PK, do you trade Tim stock alerts? No. He said, why? I said, because it's impossible to make money trading stock alerts, and I urge everyone not to do it. Tariq Yunus, good luck with your journey, brother. Love your dedication. Thanks a lot, Tariq. I mean, I'll be in this for a couple of years, and it takes a couple of years to develop a knowledge. And it might take until 2018 even. Like, I'm not bothered. It's like learning advertising. It's like learning journalism. It's like learning fucking brain surgery. It takes a couple of years. Chris Waits watched a few of your videos, mainly for Sarah. Great news on the Green Day. I was looking at the Millionaire Challenge, thought it was a bit expensive, or too expensive, or so expensive. Are you doing the challenge or silver? I am doing the challenge, and there's 2 ways you can do this. And please use my affiliate link if you sign up for any of Tim's services, because it's in the description box, and he's got a sale on right now. But the difference between silver and the challenge is silver is less money, but you literally have to watch every single video to familiarize yourself with the patterns, because I've been doing this for like 9 months now maybe, and it takes so long to get familiar with the patterns, and you have to have so much exposure. And the thing with the challenge is it's more expensive, but you get access to the challenge chat room, the DVDs, all of the webinars, and it really helps it sink in a bit faster, in my opinion, and it's worth the investment. Neelis Uber Von Vicious, Green Week, baby. Now on to your first green year. Them suckers will hate, ha 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 ha. And yes, honestly, Green Week last week, Red Week this week, I really think that I'll be inconsistent for maybe another 3, 4, 5 months. I'm not preparing to be profitable until at least 2018. Let's just jump on to the trades. I'll see you later. Okay, so this is WKHS. The long-term history of the stock is not that great. I mean, we can see that. I mean, it's a $10 stock and it's down in the 2, so it's obviously a fundamentally flawed company somewhere along the lines. But it had these 2 green days, and the 2 green days came from this news. So if we take a look, Workshop Group unveils W15 electric pickup truck, an American technology company. Well, it's American, so that's one thing. An original equipment manufacturer of battery electric range vehicles, which is cool because Plug recently ran. I mean, I think it's a fairly hot sector, green technology. It unveiled its first electric pickup truck designed for the fleet market. The first drivable, W battery, range extended pickup truck debuted at a expo, which is okay. And I mean, it's not a contract for someone to buy a lot of them. There's no kind of financials in it, so it's not really that strong. And the CEO, Steve Burns, it's here, it's ready, a new era in fleet vehicle begins. Our team does, do you know, I write these press releases for companies and I know it's just bullshit. Our team designed the W15 not only for the exceptional performances, but also for the lowest total cost of ownership. And I mean, it's in that the guys have got, Ben said we have leveraged the platform technologies used now at commercially available C-Gen, whatever vehicles, as well as our partnerships with Panasonic and BMW. So it's cool that they've got a new product. It's cool that they've got partnerships with big companies, but this isn't kind of a contract story or anything like that. So nothing major, but the news is lifting. And what got me interested was this kind of trend line. It was following, and it looked like it was maybe squeezing shorts. And I saw it pop up here, and I was interested from then on for a break of 4. And I had an order in at 401. I got executed at 401. And then I should have had a stop of about maybe 15 to 20 cents because it is a jumpy stock. I mean, it's jumping from 4, it's jumping like 10, 12 cents in 1 minute. So I should have had a wider stop loss. So basically what happened is I got in that break of 4, dropped down to 390. I got stopped out at 391. Another reason of not having stop losses, I think I'm not going to use them anymore. And then it pushed up to 430, which was kind of the goal that I wanted to have. And I would have sold half in the 430s and held the other half. And you could have held the other half for about half an hour. And then when it's not really going anywhere, when it fails to make a new high here, it's kind of put a double top in here. It's time to sell your other half and get out. But the mistake was putting a stop loss in. And the second mistake was not having a wide enough kind of risk, because it should have been 15 cents risk to make 30 cents. I did the same mistake with DFFN. It's sad. And I paid for it, and I ended up later on getting back in again. I chased up here when I should have been selling, and then I was frustrated and it was still following the trend line. So I was just like, well, it's still following the line. I'll take a very small share just to see what happens. And then of course it sold off. And that was the end of it for the day. And I just really played it horribly. And then, being frustrated, I moved on to NE, which it's a 240 million float, but it beat its earnings targets by, or it just missed out by 2 cents. But either way, it doesn't really matter what the earnings were. It's more the fact that the reaction to earnings was positive. And this kind of stock, when it's been up in the 5s and it's opened in the 440s, like a 20%-ish retracement. It's first big green day with some decent volume compared to previous days. And this is a typical pattern that I would definitely look to buy, and I've seen consistent successful results in the data that I've tracked. My stupid problem was I was reeling off the loss on WKHS and I was frustrated, and I was like, I'll tell you what, I'll just buy this on the dip because it seems to be holding its highs, and obviously bought midday into a descending triangle as it was cracking support. I mean, I made the exact same mistake on another stock, I can't remember the name. And it was just a really, I mean, I marked out the trend line thinking this looks like a great short. And I was thinking, but keep thinking about the bigger picture, the fact that it's had positive earnings, a positive response to earnings. It's on its first green day. The bigger picture is good. But I ended up stopping out around here in the 70s, and I was in the 80s. And honestly, shorts got squeezed into the close because no one wants to hold it over the weekend, because it is an earnings winner, because it is the first green day, because the bigger picture is solid. I just bought at the total wrong time, and I was telling myself, just go home, go to the mall, come back, buy it at 3:30, like you always do. Don't buy it into the fade in the afternoon. And if I had have come back, I would have been in maybe around here in the 470s, watching it go up 20 cents up into 20 cents up, going into the close in the 490s, expecting it to gap. Maybe it'll test 5, maybe it'll test 510 and fail. But either way, I've made 30, 40 cents a share. Maybe it doesn't gap up and I get out and I've made 20 cents a share. But I just played the stock totally wrong because I was frustrated. And it's sad because I played WKHS, right idea, shouldn't have had a stop. Small error, otherwise I would have made profits. NE got in through frustration at the middle of the day, but otherwise it's a good long-term pattern. Just right time, wrong time, but right bigger picture idea. Again, just wrong on the execution. So this is KTOS, and I'm interested in KTOS for a number of reasons. And if I just bring up what KTOS is, it's a defense and security solutions company. It provides unmanned systems, which I'm guessing is bots and drones,
Satellite communications, microwave, not the type that you make kind of eggy bread in, like microwave is in fucking satellite shit. Cybersecurity warfare, missile defense and combat systems, as well as military law enforcement and civilian tactical training. Clients include US military and security agencies and administrations of the US government, which means it's a very hot sector for the fact of what's going on with terrorism, what's going on with Donald Trump, what's going on with Syria, North Korea. Very, very hot sector in the world right now because of the uncertainty in the world. And if anything does go wrong, the first company's price that will spike will be a defense and security solutions company. We've seen it in the past. So that's the first thing. The second thing is they just reported earnings yesterday of 10.6 million, which was more than double what they earned in Q1, with revenue of 167 million. So the company is doing very, very, very well. And if we look back 3 years, we can see that it's on a multi-year breakout. I mean, even if we go back, let's say 5 years, let's see where it is. I mean, yeah, it's pretty much an all-time highs breakout. If it can break out, let's go back 10 years. Yeah, 10 years it was a lot higher. But I mean, if we can have a multi-year breakout, then it's absolutely massive. And the thing is, all we need is a kind of an analyst upgrade. All we need is some sort of something to happen in the world where people turn to defense, and this thing is gonna run. And if we look back over the last 2 years, or maybe even the last 3 years, I mean, for sure, it tried to break 9 here, it tried to break 9 here, and I'm aware of that. So when I'm thinking, can it break 9, I'm thinking, well, I tried 3 times and failed. So the 4th time, what is it going to do? It might fail. But the fact that I've got in on earnings, the fact that it's a hot sector, you never know. So I got in here on the break of 9 at 901. It's uptrending to 908. If it doesn't gap up tomorrow, or on Monday, sorry, I will get out at 9 and I will lose $10. But if it does gap up and it runs to 950, 10, 11, on the fact that something happens or it's an analyst upgrade on the finances, it can go to 10 or 11. Maybe shorts get squeezed, it goes to 10 or 11. But these are the trades that I really like because I'm risking nothing because I've got in on a strong close on the uptrend. But the potential again is big. It's like I could gain 10% on I've got $1,800 in this, so 10% is $200. 20% is $400, and it's just if I get a little bit of luck. But if I don't get luck, I lose nothing. If I get a little bit of luck, I can make $200, $400. So these are the exact trades that I want to be in. It's a hot sector. It's just had good news. More good news could come, and I can't say it any better than that.
What up, guys? Hope you enjoyed that. I just want to say that not as funny a video as usual, but the reason is that I'm being particularly serious right now because I really feel like, while it's not reflected in the kind of the small wins and losses, I'm really putting in the building blocks to become a successful trader in the long term, and I can feel that. And there's some cool yachts over there. But it's all about the big picture. And if you guys see what I'm saying, if you believe, then say the word big picture, because success doesn't happen overnight, and I'm in it for the long run, baby, and I hope you're in it for the long run with me too. I'll see y'all later!